It was interesting because it was at Washington Post op-ed from Larry Summers yesterday afternoon, whatever, really telling, pushing Powell to get on with it. They're just basically saying everything we've talked about. But that's come from Summers because it was the G30 that pushed this issue with the standing repo facility. But okay, we'll get, let me entertain the questions. Is Joey in? Because he asked a question about the oats the other day and I never got to it.
Joey O, he should be. Joey O, are you here? Actually, I don't see him.
Okay.
That was a good question.
Well, I mean, I'm talking because I'm one of the idiots in the world who trade the oats.
Oh, he's here. Good.
Yes, Joey. I learned it from people at the Board of Trade, old-time grain traders who always said, as the oats go, so go the grains. It hasn't been quite as been. I really kind of, the oats are interesting to me because I eat a lot of oats. So I paid attention to them. And, I was always thought, and Robert and Brian, who are judges, they have told me, Brian especially taught me, I always thought that oats were much more of an animal feed, but they're really not because they're such a coarse grain. But the amount of oats being consumed by human beings, hell, I even own Oatly stock because even though they have legal problems, so the stock has been a terrible performer. It's a Swedish-based company, but I bought the stock because I had read a few articles about the Chinese owning 25% of Oatly. And I said, well, if they own 25% of Oatly, their ability to distribute that product is pretty big. But my daughter, who's a chef, professional chef, quite accomplished, really likes the product. So she thinks oat milk is a really, really good product. And it's much bigger in Europe than it is here. It's really just starting to catch on here. But the oats are interesting because this has been a terrible growing year. And yet the trade was frustrating for me because I'd get long. I can tell you this, how many times, 320, 330, 340, and then get washed out. And then I try it again. And now, of course, we're trading right now, the SEPO, which are another one of those bastard contracts because they're at the carry old and new crop. But the oats are up to 517. And even the D's, and that's because the harvest, they're not going to bring in a lot of oats because the oats are grown further up north and it's been really dry. They're getting rain now in the Dakotas, which is why the beans have come on, the new crop beans have come under a little pressure. But interestingly, in the soybean market, the spread is widened out between another bastard contract, the SEP soybeans, which is again, a old crop, new crop situation because the August beans are going, that's totally old crop. Or for the most part, old crop now, SEP contract. And now we're going to hit delivery or start first notices next week. So, but it has been very dry in the major oat growing regions of the US, the Dakotas, Minnesota, upper Wisconsin, and certainly the southern parts of Manitoba, of the Canadian prairies. So the oats are pricing to that. And your question is, yes, that's what I've always learned. And it used to, up until this year, I haven't done it, but even last year, I would call and talk to the people at the Department of Agriculture. I'd call South Dakota, North Dakota, and nobody ever calls them. We talk about oats, and they would actually teach me a little bit. And I play golf here in Arizona with a guy who's a lawyer in Grand Forks. So he laughs at me because we talk about it. He says, nobody talks here. He says, you're the only idiot. We have this ongoing. He says, you're the only idiot. He says, I have a lot of clients who are farmers and nobody talks about oats. So, but I thought it was a good question, and I appreciate the question. So that's it. That's my answer. Is there anything else? I mean, because I've investigated it.
Joe, do you have any follow-up? And feel free to unmute and yeah, feel free to everybody. So he wrote, may I ask if you're trading long? He wants to know if you're long soybean oil versus short meal. If China is stockpiling to feed their people, demand for beans and oil, while bean meal is feeding animals.
I've never traded the crush, because and it's a silly reason, because I've really bothered to understand it, and I've paid one of the foremost experts on ethanol is at the University of Illinois, Peter Goldschmidt, and I had found him back in the early when they were starting to use food for or grain for ethanol, a lot more to meet the mandates, the Renewable Fuels Act. So I really wanted to buy some ethanol plants. So I went and learned, and then it kind of drove me to farmland. I was driving around, I used to drive around with a
That's a great story.
Indiana, looking for farms, but it was 2005 and 2006, and anything that was close, because in order to do ethanol, you had to be near a railhead, because you can't ethanol, you can't ship by pipeline. It's too corrosive. So it's either truck or railhead. So you have to be close, just, for those costs of it. So we were competing with developers for the land, and farmland was like getting crazy expensive. And I talked to people on the floor. I had people who were willing to invest. We had really compiled 10, 20, 30 million potential dollars of, because some people, I really liked the idea. And I learned enough, but I couldn't make it happen. Not in good conscience could I buy the land, because we couldn't even, because until we were looking to buy farmland, and the price has gone up something that the return on the immediate return on the investment to at least get you through the lean years just was not going to be great enough. So we wound up not doing anything. And then I tried to get involved in a ethanol plant down in the Texas Panhandle. Because Terry and I talked a lot about it. He showed me a deal, and I talked to Goldschmidt about it, and it was really a good deal. It was from a sugar cooperative. So it was sorghum and sugar that were going to be the feedstock for the ethanol. And you don't lose that, by the way. That goes into animal feed. So there's a lot of good aspects to it. But that deal down in Texas was so good. They weren't letting any northern carpetbaggers in that deal.
That makes me laugh. It makes me think of Billy Crystal and Jack Palance.
Yeah.
In that old movie.
Yeah, that was what you call it?
City Slicker.
Yeah, that's great. The second one was lousy, but the first one was great.
There's so much going on, and we had a really good conversation yesterday. I put the steepeners on too. I added a little bit this morning.
You put flatteners or steepeners?
No, I bought the 30, sold the 5s.
I rolled over to D's this morning, so I've done the same thing. I was totally out at 5 o'clock your time this morning, and now I'm putting them back on, so I'm going to work my way into it. But the Larry Summers piece, if you can bring it up, it was in the Washington Post. When I was in judge room yesterday, I said it was the Wall Street Journal. It's not the Journal, it was the Post, and it was really very hard hitting, by the way. And then you have Bostic came out this morning from the Atlantic Fed, Raphael Bostic, and who's been in the last 4 weeks, he hasn't been very dovish, but he has a history of being very dovish, and he is a voting member. And now he's talking about commencing in October. So I'm of this school of thought, as I've told you, Maddie, that the word has come down from on high.
Mm-hmm.
I think the minutes didn't, the minutes were kind of funky when they were released. When was that? Was that last? Oh, it was last
Yeah,
Wednesday.
last Wednesday.
Yeah. They were kind of funky about this. And even the financial media has really been lax in discussing the impact of the standing repo facility. I think this is major league important. And I think this is what, this is for me is what driving the play. And yesterday, if you get a hold of it, did I send it to you? I have the podcast. I sat yesterday with.
No,
Oh, hold on. You guys can listen out. I was going to put it out in a blog last night, but I couldn't get to it. I just was. Hold on. I'll give it to you right now. Andrew Perry was wild about it. I'm going to send it to you. You can do with it as you want. So this was actually pretty good. We'll continue on this because, well, it's with the Financial Repression Authority with Benugli, who I've done a lot of them with. But this was a three-way, which was, we have Brian Pellegrini, who you don't really know. Brian was Bernard Connolly's main research guy, and Brian had called me and said, he's trying to promote his business. Can I talk to Benugli and possibly get him? So we did it, but we got Harley Bassman from the Convexity Maven, who's one of the foremost authority. I mean, he worked at PIMCO. He's a really bright guy, brilliant in the option strategies, by the way, with futures contract. He really knows his stuff, far more sophisticated, but I like reading him because he's such a deep thinker. You can subscribe to his newsletter. In fact, he invites it, the Convexity Maven. Really worth a read. It's sophisticated, but if you struggle through it and read it a few times, when it comes out, you'll learn a lot. So I saw him on. He did a podcast with from HedgeEye. What's his name? Keith McCullough.
Mm-hmm. Yeah.
2 weeks ago, but it was after he put out a piece, and I read his piece. I read Harley Bassman's piece a couple of times because I disagreed with him because he was talking about how the market needs a steepener, and that was he was leaning. So when Benugli was able to put this together, so I could listen for quite a bit, and then Brian Pellegrini was speaking when and then I entered you'll see I entered the conversation, and I tell him, I'm kind of shocked that you think that the curve is going to steepen. He says, no. He says, I'd like to see that, but I'm not sure that that's going to happen. So this is one of the really good things about doing these podcasts is that you can be, again, we're there for the discussion and to ferret out good ideas and possible, of course, and we all agreed on that, it's all about, getting the ideas and making money. We could sit here and discuss till we're blue in the face, but so what? And again, as I like to say, it's not about validation, it's about discourse, because out of that discourse, hopefully we'll find really good investable ideas. So we talked quite a bit about the curve. And he says, no. And we talked about the history, going back, because he's been around long enough too. And he was at PIMCO for years, really bright and worth reading and listening to. But he didn't say, he says, no, I'm not, he said, I'd like to see it steepen, but I'm not saying that that's going to happen. But he explained, I said, okay, because when I saw you on the podcast with HedgeEye, I had to watch it. I said, first of all, because you sent it out, but I had read the original article that you talked about with Keith McCullough, and I disagree. And I told him, I don't see that at all, and here's why. And we really didn't even get into because so much of my thought process is based on what's going to be the real impact of the standing repo facility. So it's an interesting piece. Now, I've shrunk my position going into this because I am looking for greater opportunities at better levels, hopefully. But now I see the 30 years already taking off.
Yeah, 30 years been rallying.
Yeah, not happy about it. Was looking for a better opportunity. Interestingly, that even with the sense, and I think there's now a sense out there that Powell may be a little more maybe a little more aggressive here than a lot of people thought, because the mainstream media, every time this would when I would turn on CNBC literally for 3 or 4 minutes, because I just wanted to watch one of the releases, and I would hear them start talking about the bonds. And I've been trying to engage Santelli. I was talking to us yesterday, but he never called me back, because they really don't discuss the impact of the standing repo facility. And yet I think this is very important, but that's what I want to see the way I'm hoping, again, I'm hoping. I don't know anything more than anybody else, although some people certainly know more. But seeing the Summers op-ed piece the day before, or Powell is supposed to speak, or is speaking, and the stridency of Summers, and also on Monday or Tuesday, Mohammed Al-Arian had a piece in the FT, and on Bloomberg. He's busy writing for a lot of places, and a lot of places must be one of his new revenue streams. That, and he's got a posting in Cambridge, I think. So he too was pushing hard on Powell. What did he say? To be bold. Bold. That was the title. Hold on. I think we talked about this, right? When was it?
Yeah, we did. Yeah, that's why I think it's so interesting. There's so many different scenarios that can play out today, and I think there could be a lot of surprises, right? Because of the standing repo facility.
Yeah, and we want to see what the market reaction is. That's the most important thing, because how is the market going to react? So because let's understand, and make no mistake about it, the algos, if they saw Fed to begin QE in September, or curtailing QE, that's in September, telling you the equities would get hit initially. How long it'll last, I don't know, but we can bet that the algos will drive, because that's what they're geared towards. The algo headline readers are, it'll be Fed, viewed as Fed tightening. And don't forget, the media, if you have real press credentials, and I'm not even sure what that means in today's world, they historically get the speech half an hour before the rest of us see it. Yeah, here, I've just seen it now. Feds Bostic says reasonable to trim. Hold on, let me click on that. It comes and goes. Feds Bostic. See, New York Times has an article this morning. The pandemic is testing the Federal Reserve's new policy plan. I don't buy that for a minute, because that's not what I'm hearing. So now, who puts that article? I don't read the New York Times. I just see that somebody just posted the headline to me. But here, this just came out again. Feds Bostic says reasonable to trim bond buying in October. Bostic would want to do the taper quickly. Again, they're all talking about quickly. Now, I had sensed from what Bullard said yesterday, as Peter Bookbar said this morning. Now the Fed, we've heard from 4 Fed people in the last 24 hours, and they've all been singing from the same hymnal. A little aggressive, here we got Bostic, he's citing commencing in October, Bostic inflation episode likely to go into, for PCC's rate liftoff at the end. So when they're not raising rates, we're talking about just beginning curtailing QE. And the that I got from Bullard yesterday was that it would be an 8-month, and I think Bullard would start in September, and it would be 8 months, not at each meeting, but monthly, and they would cut the Treasury by $10 billion a month the mortgage-backed securities by 5, which would bring you 15 billion cut a month. So it would take 8 months to cut 120 billion. And then at the end of 2022, after they see what that effect of it, because they're not going to redo the mistake that Powell made, and it was a mistake in the second half of 2018. They're not going to do that. So they've already told you they will do QE before they'll raise rates, unless something but I don't know what drastic, we already are seeing headline inflation in a month of 6%. So, I'm not sure what drastic would it require. So that's just, and that's I think to buy off the real doves on the Federal Reserve Board who can live with it, because any economist, anybody who understands economics really sees that QE is doing nothing. It's doing nothing. Yes, it's raising certain asset class prices of certain asset classes, but economically, it's not doing anything.
Such an important point.
It would do something if it was being lent. If all this money that the Fed was creating was being lent by the banks that they were borrowing, but if that was the case, inflation would be even higher and GDP would be at like 15%. That's how much there is out there. But it's not being lent. It sits at the Fed. And that's the issue of it's not doing anything. It's just, what it's doing? It's basically what they admitted to with the announcement about the standing repo facility. All it's doing is that they're ensuring that there won't be any bond calamities like there was in March of 2020, in September of 2019, when you had some real hiccups in the bond market because you got a lot of selling and because of the change in the regs under Dodd-Frank, they didn't have the buyers. But I'm not sure that that's the case anyway, by the way, because nobody's really analyzed this as far as I know. I mean, some academic work, but I read a few of those studies, and I'm not sure. I'm not sure that what happened was that there were some really big leverage players who were trying to pick up nickels and dimes in front of a steamroller, and all of a sudden it started to reverse on them, and they just panicked and they just hit the market with so much as they were trying to get out of positions that wind up costing them a lot of money, and more. So they're trying to insure against that. That's why they're doing QE. They do, again, it goes back to Bernanke and the great mistake that Bernanke made in June of 2013 when he announced it, that they were going to cut back on QE and end QE, and then the market had what's famously known as the taper tantrum, and they ran tail so fast from that policy. And that's the situation that we exist in. So they keep thinking that every time they want to pull back, the market's going to view it as tightening, and they're going to run for cover because of all these people who own bonds at such ridiculous prices because of the Fed, that they're going to have to, that it's going to crush the market and they're going to have to do this again. That's why they have the standing repo, because the way I calculate it with foreigners, because don't forget foreigners own a lot of US treasuries, between the domestic market and the foreigner and what the Fed has, and there's a lot of flexibility, this provides them with a day-to-day buying of over $1 trillion of bonds, of treasuries, of all durations. And they can roll it every day because that's what the repo market avails them to do until the market subsides. And they can expand that. So, and it's there. So anybody who wants to sell, yeah, it's going to cost them something, but that's the risk that you take of taking on these positions. Why should it be riskless? But it's minimus risk, and you don't have the risk of a price collapse because the Fed is there. And they've told you, we're here. we're here. So I think this is very important. And to me, it's almost like they've created, as I said when I first read it, I wrote in the blog that it's to me like a backdoor yield curve control.
Mm-hmm.
Because they can do and buy whatever they want.
So ultimately, if today they discuss, if Powell talks about tapering, it might not be as bearish as many think for equities.
Well, that's, yeah. And that's what I want to see, because I want to see the reaction. Now, that being said, last week, as we talked about, what day was I on? Wednesday? No, not Wednesday, Tuesday.
Monday.
What day?
Monday, I think, right?
Oh, was it Monday? Well, so Monday when we talked about it, and we talked about what a significant day Friday was, right? Got long.
Yes.
If I remember the conversation, you got long while I was selling them at 44.12 because I had to honor that phenomenally important technical juncture, as from McGee and Edwards, which was that it was going to possibly be that it's set up to be a what is known in the parlance as an outside key reversal, not just an outside reversal, but when a market makes a key reversal at either all-time highs of a contract or all-time lows, that is a significant statement. And the market,
they're very rare. It's very rare to catch those well.
yeah, because there's only one high in the market.
Right.
And there's only one low in the market. Every market only has one high and one low.
That's all it needs to have.
So last Friday, it was setting up for that. And then I saw it, but I had my orders in. I said, well, I'm going to sell at 44.12 1/4. And it's exactly where I sold them. And I took them back. I actually made money on a few of them, but I lost money, but I lost minimus. It was because I said, well, they're able to overcome it, even though the market closed lower on the week. It was not what I thought it was going to be. Now, we're going to watch this. Now, this week's low, I believe, let's take a look at it. Because could this come back and play? Well, it would have to close below. Let's talk apples. All right, so last week, you made all-time highs. I'm on a weekly chart, okay? So last week, you made all-time highs at 44.76.5. That was the high last week, right?
Mm-hmm.
Which was all-time highs. And the previous week's low was 44.12 1/4. So if you were to close last week, now pay attention, last week, I'm not talking this week, below that, you would have closed below the previous week's low after making all-time highs, outside key reversal lower.
Yeah.
This week, we have a low but that doesn't matter because now we'd have to close below last week's low, which would be to do the same because we made all-time highs this week. So we would have to close below 43.47.75. So that's like 130 handles lower than we are right now. Do I think that I would assign that a 2% probability. I can't say it's not possible because what if Powell said something that was, in the market? I'll assign it a 1%. It's a very low probability as far as I'm concerned. But I do have to watch it. I've been around long enough. So if he said something, and my point to Powell is you may as well, and when I wrote the blog the other day, and I've gotten a lot of good private feedback about it, because I too challenged Powell, after, and I talked about Mohammed Al-Arian saying be bold. With the stock market making all-time highs, if you're going to be bold, now is the time to be bold. Don't do it when the stock market is getting beat up because you've been trying to fight that. Now you can do it because the market has some resiliency in it. And that's what we want to see, right? We want to see, the Fed is being more aggressive, much more aggressive than it was anticipated. So let's see but with that standing repo, I'll tell you what, I would love to see a huge break like that. Because then I would step in and I would buy it I would do the exact opposite trade I made last week.
Mm-hmm.
Right? Where I was
Yep.
selling it against the low, I'd be buying it against, and just to see for a small risk. I would totally revert. I mean, it's a highly, highly, highly improbable event. But I will put that wish order in, by the way, just in case they can get crazy. So
Oh, I already do. I already have them in down there. I always do.
Yeah, because it's worth taking the shot there.
Yes, it is.
The stock market, it's bold because again, they're not going to be raising rates that much. Here, Bostic will rate lift off at the end of 2022, and others are saying at the beginning of 2023. So they're trying to assure the market that way. So it's totally on my analysis, the way that I look at this trade of the standing repo facility and why I think it's so important. And I'll be watching the yield curve. Now, initially, they'll probably whack the 30 years. So I'm going to lose some money initially. And I know that's it. Now, interesting. The gold was just up $8. It's now $1 lower. Currencies, did something come out? No, not that I know of. Wait, hold on. Let's see. Anybody got any news that I'm not seeing?
No, I don't think so. I think we're just kind of sitting.
Oh, listen, look at the bonds get back too. But if that's right, and this is where I get into it with Harley Bassman, who again, somebody who I have great respect for, but it's a good discussion because it's a needed discussion. So, but if I'm right, I think the curve should flatten. You see where the 530 is right now.
Are you looking at the curve? Or you're just looking at the prices?
Oh, hold on. I'm going to get the curve. Let me see. Alex. Yeah.
By the way, if anybody has any questions, let me know.
Yeah.
Please feel free to talk.
Please jump in here.
Matt, can you, are you there? I'd like to get your thoughts too. Matt Cicero.
Hey, I'm here. What's up, Pax?
Hey, kiddo.
Hey, Ira, how are you?
Who is this?
It's
Matt.
Matt. Pleasure. Cicero.
I'm good. Okay. The 530 right now is at 109.2. It's been back and forth between 113 and 109 for the week. But if I'm right, I think that going into this, that once the market understands and bothers to think about what it's looking at, is that we should go test some of the recent lows. Let's see. What was the most recent low? Let's see. Oh, here's a list of, so 9 o'clock, Jerome Powell. The list of speakers today is actually, well, Alan Blinder, I could give two shits about. I like Don Cohn. Don Cohn's an interesting guy. He was the vice chair even at the beginning of Bernanke's sitting. Don Cohn was actually the choice of Alan Greenspan to succeed him. Don Cohn is a very good central banker, but George W. was in the White House, and the Bushes were no friends of Greenspan because Bush 1, the father, blamed Greenspan for his loss in 1992 because the U.S. had gone into a recession, and they blamed it on Greenspan's policies. So there was no way, even though they wouldn't get rid of Greenspan, because that would have been too big a thing. So even George Bush reappointed Greenspan one time. But when Greenspan was leaving, Don Cohn was his choice, but they were not going to let Greenspan choose his successor. just for the record. But Don, so that's the list of speakers today from Jackson Hole. Let me see what anybody else who's worth. Who could? I don't even know her. Blah, blah, blah.
Mandy, did you have any questions?
Yeah, the one thing I was curious about was the dynamic around the Treasury General account getting brought down pretty hard, and whether or not that is really stealth QT, because and whether or not that impacts his decision at all.
Man, I saw the piece that was put out by, who is that, man?
I believe so. I forgot where I saw it, but it's been it's been something I've been seeing for.
That's who put out that piece. And you know what? I disagreed with it wholeheartedly. They made a big deal on it. I don't think, in thinking that it was a stealth form of that. I just didn't see it. So maybe they're right. I don't see. I mean, that's what's taking place in the reverse repo. Yes, and why we got to 1.3 trillion. Yeah, yes and no. There's a lot of games that get played because of the debt ceiling. It has some impact on the short end. I'm not looking at the short end here. I am totally focused on that because I know that the reverse repo is 5 basis points. I know that the interest on excess reserves is 15 basis points. I know those are the givens, and what's going to go around it, it gets very difficult. It gets very difficult. And another reason why they ought to cut QE, because what goes on with that reverse repo is, of course, that the banks who don't want to hold cash put it back to the Fed, and they want to take what is known as high quality liquid assets, which is T-bills. They don't even want longer. That's what they want. Maybe out to 2 years, but they don't want cash because they get penalized for holding cash. Now, if the economy was, if they were really on a run, they wouldn't be depositing that cash at the Fed. They'd be lending it, right? But there's so much available, they can't even lend it. They have no desire to lend it because anybody who's coming to borrow, those who they would like to lend to don't need it because they're all flush with cash too. And those who need the money, they don't want to lend because the rates aren't high enough to justify. So they park it at the Fed. So I disagreed with that man piece. I know it wound up on zero hedge because he sensationalized it, where I thought he tried to promote it as meaning to me more than it did, but just my view of it. So
I appreciate it. Thanks, man.
Yep.
Does anybody else have any questions?
Yeah, please jump in there. There's a lot, but I'm now kind of sitting here just biding my time and waiting for the, look at now the bonds go up there. So everything we're talking about is really happening here because now the market is getting a sense, well, maybe there is something coming, maybe because it cannot be a coincidence that all the noted doves on the Federal Reserve Board have now become aggressive in pulling back QE. It cannot be. That's what we talked about on Monday, and it's what I've bought. My last 2 blogs have been. This can't be coincidence. And I've been around in the world long enough that when the CEO or chair of anything wants something done, they're on the phone pushing. I don't care whether it's a corporate board. They get on the phone and they line it up beforehand. And that's what I don't think I'm going to get hurt here badly if I'm wrong. I don't. Maybe I'm naive, but and I have a minimalist position on because I'm hoping that the market gives me a better opportunity. This is one of those. I'm looking at now even the currencies. The euro had been rallying a little bit this morning. Listen, the euro opened up at, I'll give you the pit opening just for a better geographical point. So we opened up in these September euro currency at 117.66, and now we're already down to 117.40. Nothing's happened. but everything kind of broke together. If you notice, the bonds were starting to rally, they broke. The metals were rallying, they all broke together. So now all of a sudden somebody has some sense of everything we've been talking about going, oh, maybe this is a possibility, because the headlines were, well, with COVID, that the Fed, I read you the New York Times headline, right?
Yeah.
Oh, now Harker from Philadelphia has just come out. There is some evidence inflationary pressures may not be so transitory. So they're all looking for rationalization as to why they should do that. At least they're beginning, okay? But so then, what was the New York Times piece, which I hate? The pandemic is.
Hey, Ira and Matt.
Hey, Jake.
Yeah, I got a question. I hope I'm not going too far in the weeds here, but it's
No, that's
something that's
okay.
kind of come up the last few weeks in conversations. And, you know, I know you're a little bit of a history buff or whatever, but do you see any similarities to what's going on, you know, in our monetary policy and our political stuff compared to what was going on with Carter back in the Carter administration? You know, is there any lessons that we learned from that we could apply to what's going on now? I guess that's my question.
Well, you know, and you know, we can talk about the financial aspects, and I don't want to. There's people dying, and I'm just not going to go there. But I don't talk about the politics of it. But I will say this: that when Biden did this, he definitely wanted. He was aware of the impact of the Iranian hostage situation and what happened. And he wanted to avoid that at all costs. Okay. Which he, you know, the fact that the head of the CIA met with the Taliban earlier, but they've been meeting. There's no question about it, because this is just the way things work. And that was totally opposite of what happened in '79. There's no way that the head of the CIA could have gone to Iran to discuss with the mullahs and the Iranian revolutionaries anything at all. Would not have happened. They would have taken him, held him hostage, and that would have, because they didn't care. So that told me right away, this is so far different. And it told me that they'd been talking to the Taliban and they had a relationship with them. And that's why those arms were staying there, in my mind. Seen this before, even Reagan. Yeah. Right? That's not new.
Yeah. Yes, sir. And I guess I wasn't even getting at the
Okay.
political aspect of it. I was more on the you know, what were the repercussions on the financial and the monetary side of things, or you know,
I'm going to get there.
Similarity. Yeah. I just wanted to clear that part of the question up. I wasn't trying to get political.
Okay, but it is important, because it was amazing to me, because we got the news right last Friday, and yet the dollar. I think we talked about this on Monday. You know, the dollar really had a pretty good week last week.
Mm-hmm.
It's amazing.
Yep.
You know, and the stock market wound up not bad, and the initial thrust from from Kabul and everything that was going on, it was really didn't play. And the bond, you know, so that told me also that we might be seeing some changes. That's the way the money, but you can't compare 79.80. And this is, and I'll give it to you why. And it irritated me. I was monitoring a discussion on Slack for which a group that I consult for, and I have a lot of respect for, and have been using my blog for a backbone of their global macro work for a while, for 10 years already. I was monitoring a discussion they were having amongst themselves on Slack, and one was pushing that Powell is doing all these great things, and he noted, and in the discussion, I was watching the discussion for 20 minutes, and they noted, well, Powell says that Paul Volcker is his hero. And my immediate response, then I had this, I no longer sat quietly. I said, there's no chance. Powell can say Volcker's his hero, but Paul Volcker had backbone and he was willing to take the beating. There would never have been what we call the taper tantrum. I mean, the tantrum would have happened and Volcker would have said, yeah, you got into those positions, you're going to suffer you're evidently positioned the wrong way. And we got into a discussion about that. So I'm going to tell you, this is nothing like that because Paul Powell has shown us he's no Paul Volcker. If he was Paul Volcker, he would have stayed the course through 2019, but he pivoted away as fast as he can because the lesson they take is Bernanke. They don't take the lesson of Volcker. Volcker would be looking at this. Here was a guy who endured death threats. I can't tell you that when I would go to work and when my office was on LaSalle Street and I'd walk over to the CME, how many farmers, because farmers were getting killed in, 80 under Volcker with, farmers are always borrowing, interest rates at.
Yeah, they're really, really leveraged in compared to now. Terrible.
Terrible. And so
Yep.
Paul Volcker was enduring death threats. There were tractor rallies on LaSalle Street. I can't begin really to tell you. And the unions, I'm not talking public sector, private sector unions were still they still had some power and influence, and there were rallies. Paul Volcker endured hardship and pain mentally and stood tall. We have not seen this at all. So I waved that off. So it's a good question and nothing whatsoever.
Thank you, Ira. And like I said, always a pleasure to listen to your thoughts on here.
Well, so I mean, it's a really good question because to even cite that, you don't understand Volcker at all. Volcker was a great man who saved America's middle class. There was a lot of pain involved, but he was delivering the pain. And I have to tell you, I can't stand Jimmy Carter for so many different reasons, but Jimmy Carter had enough. Don't forget, he allowed and supported everything that Volcker was going to do because, Volcker gets appointed in 79 and he ensured that Carter was dead meat, but Carter still appointed him. That's a far cry from what we've seen too, where everybody wants to be able to control the Fed, but Volcker was not for controlling. If Donald Trump was a different person, he would have appointed his Fed chair, not Jay Powell, but Kevin Warsh, because Kevin Warsh is probably more in the image from everything I've read, and I've read a lot of Kevin Warsh's speeches. He's at Hoover now.
What a great name.
Kevin Warsh is, but he's also a member of the G30, which, I can't stand the G30 because of its whole concept of this private group that has way too much influence. But there are a lot of people on there that I do like and respect. Kevin Warsh is one of them. But there's no way that Donald Trump because they interviewed Warsh for the chairmanship, but I knew when that took place, that there was no way because he was too strong an individual for Trump. It was like when they talked about I think it was maybe when Bernanke or that they were going to nominate Larry Lindsey.
Hey, Ira, let me jump in real quick. Everybody, we open in 30 seconds, so be mindful of it. I'm gonna trade lighter size out of the opening range today. The opening ranges will be posted in Discord, so make sure you're aware of them. I will take the first 2 trades out of the opening range. Then after that, I'm gonna wait and I'm gonna wait for Powell and not try to time the market, let the market do the work. But I will take those first couple of attempts out lightly. I'm trading smaller size because the volume on the bid and offer is very, very light and very choppy looking. So this could be dangerous. Remember, when in doubt, stay out. Sorry, Ira.
No. So, I mean, so I really think that, who asked that question? I'm sorry, who asked that? I know.
That was Jake, Farmer Jake.
Farmer Jake from Northwest Iowa. You getting rain this weekend, Jake?
Yeah, we did get some rain here the last day or two. It should help from anything going too far backwards, but a lot of it's probably too late to make a whole lot of difference. I mean, what's there is there, and we won't know exactly what that is until we get to that point here in the next 3-4 weeks or so. So,
Okay.
but it's just a lot of, like I said, and I wasn't trying to get into the political end of that by any means, Ira. And just in conversations that I've had, with locals and stuff like that, our land market is so hot right now, so high priced that people are seeing so many similarities to the early 80s, except the difference is we don't have double-digit interest like we did in the 80s. And when you go back to the banks as far as leveraging, when they were borrowing money back then, people were buying farms, buying real estate for, and borrowing 80% of the price of the real estate, or even 95% of the price of the real estate, and barely paying the interest on it. And now most of these lending institutions won't even borrow you 30% of the value of the real estate, and their interest is cheap. But so it's just on people's minds, with the market that's going on in the real estate right now, similarities that way. And I guess that's where my question kind of stemmed from. So I appreciate your answers and thoughts on that.
I have a grandson who's a year and a half, so I'll call you Jakey.
That's fine.
His name's Jake. So
it's a good name.
You raised such an interesting point. And this is what the Fed, and this is why they should begin immediately, at least curtailing QE, because there's so much liquidity out there. So you are now getting these private concerns. They're almost like REITs buying up farmland. These are private equity groups, and they're bidding the farmland away because they've got so much cash to put to work. So this all comes down to, Milton Friedman's great line that there's no free lunch, right?
No, there's not.
So everything that you do, it's like in physics, everything has an equal and opposite reaction. Well, everything you do in finance. So when you keep rates artificially low and you keep pumping money into the system, it's been going into the stock market. Now, can we justify these elevations? Well, we can. That's a weak symposium, that we can have up in Omaha to counter the other conclave that takes place.
Yeah.
Right. So we can have this discussion.
Hey, I used to farm right next to where those guys own some ground. The person you're talking about. So
yeah. So we'll pitch a tent on Jakey's land and we'll meet there. Come on, and we can have this discussion really for a week. Is the market
perfect?
Again, how do we do these valuations is the real issue, because that is critical. So, but it's all this money, and they bear responsibility. Housing prices. I sold a house, and I was able to avail myself of this situation, right? So I come out better than I would have, a few years ago because there's just.
Because it's a seller's market essentially, to a degree.
Oh yeah, and it's because so much, and you know what? It's bidding it away from people who otherwise could afford it. And it's a shortage of housing. Kiss my ass. It's not a short. It's plenty. Is it a shortage of housing, or is that there's so much friggin' money that and available at such a low cost? And Harley Bassman says it again in the podcast. It's a great. You don't buy a house. You buy a 30-year payment plan. That's what you're buying. And the lower that interest are, the more free and easy you could be with that payment plan.
Absolutely. And how much down payment do they have to put on that house? You know, 10%.
Right.
So really,
Right.
what are they coming up with for cash? You know, it's really, I mean, there's your leverage, you know, a lot more leverage than you have in some of these other markets. And that's, you know, that's some of the issues out there.
I'll scare you. My first mortgage, I got married in 1980. We moved out of our apartment. My first mortgage was 12.5%.
Yep. In the 80s.
12.5%.
Yeah. So you're buying on the comp. You're betting on the comp.
Well, I needed a place to live. We had a first child.
Right.
As my mother was counting on her fingers, wait a minute, when's this baby due? Wait, hold on.
Oh, hey, by the way, real quick, I'm long everybody from 76 quarter, just well 76 half, just above the opening range. I paid for the trade at 80 quarter. I've got my stops in for a dead scratch. Cardinal rule: don't turn a profitable trade into a losing one, and especially today. I do have offers in at 86 to take profit.
Now, I'm telling you, if you're watching the market, the equities have, but the metals have certainly taken a hit. And look at what's happened with the 530 all of a sudden.
Oh my gosh, that's a beautiful thing, and I lightened up too.
Yeah, me
That's right.
too, because you know what? As sometimes it's better, you know, because I know I'm waiting for the headline to really reassert myself.
I put on a D's. I still have subs on, but I put on D's.
Yeah, I'm in D's. I'm out of all my subs. I rolled today. So now it'll be interesting too to watch the bank stocks. What, you know, right? If the curve truly flattens, will they hit the bank? Like early in this week, one day the bank stocks were up big, and then when the curve started to flatten, that one of the days the bank stocks got whacked. So those two is further confirmation. I'm not sure. I mean, I have my core positions in the bank stocks that I'm chasing for dividends, but it forces me to watch them. But right now, if you ask me, the board is intimating, and I stress that word in its full meaning, intimating that that they're leaning now to what this whole conversation has been about, as far as what we're going to see.
Ira, I didn't hear the last bit, sort of
Hey,
swallowed.
Oh.
Hey, babe.
Oh,
Good morning.
Yes, everybody. Good morning.
Wait, I hope you cleaned up your language, otherwise we're going to get.
I did just for you overnight. Porter sort of gave me whatnot for talking potty mouth.
Hey, you know what? We don't. That's too much for this room. We can't hear that.
A better vocabulary than that, apparently. We'll see.
Okay. All right. So, what I didn't hear what you said, Penn. Penn,
Pen, where'd you go?
you asked something. I was going to respond, but I wasn't sure.
Did you unmute? I don't know. Where'd she go in?
I don't know. I knew.
Sorry, guys. I was trying to unmute myself, but I couldn't do it. Sorry. Hey, I have a link to the virtual. Well, it'll be to Powell if you want it. I'll post it here if you're interested.
Are you going to pipe it in here?
If PAX wants to do that, he can do it on his end.
Okay. Let me see. I might have something up. Let's see. I got it now.
I have it. I'll give it to you.
I think. Let me see. I think I might have it on Slack. Bump, and let's see. Bullard reports. Okay, so now zero hedges running. Bullard says purchases don't have much value. See, this is the whole line of thought process coming out. There's no value to them, and that's any account. But it didn't have any value a month ago. It hasn't had a value for so long they're just pumping reserves into the system only because they were afraid of a bond debacle. That's all. There's no other reason for it.
All right. One thing about this open too, the low of the day so far is made in the opening range in the S&P, not the NASDAQ. Now we're coming back into it, but we take that out, I'll be short.
But it's amazing how that's really holding up. I'm impressed.
I agree. I agree. I covered my longs. Covered my longs from Thursday, Friday, and Monday.
That was
So I flattened up short yesterday just for a quick trade, and I flattened those up this morning.
that was a magnificent trade, really.
It really was. It was.
No, but okay, I have the link, Ben. You don't have to send it to me. It's up. So I will turn it on at 9 o'clock. But and then if you want, I'll leave this open. I'll mute myself unless there's some other questions, and I'll leave it open and I can come back to it.
Yeah, that's great.
But I think I laid out the way that I'm seeing this.
There's the agenda for the symposium, just FYI, if you care.
Oh yeah, I have it for today's speakers. I got that too. That's
That's awesome. Thank you.
yeah, we were reading it. Let's see, Marcus. Yeah, it's a lot of academics delivering papers. Don Cohn may be interesting at 1 o'clock. They have him as Brookings. He's so much more than Brookings. Alan Blinder, really not much about. So, oh, Esther, opening remarks from Esther George, of course, because she's the president of the Kansas City Fed. So if there's no other questions, I will mute myself.
All right, let's see what happens. Yeah.
Okay, I'm going mute. My wife.
Hey, Matt, are you gonna turn it on live or no?
Yeah, I don't know. I don't know if I'm going to. I don't know that. I was just thinking that, Penn, because I don't know if it'll.
What be a distraction?
Maddie,
Yeah.
they're beating up the 5-year, Maddie.
They are. They're killing it.
You know, so somebody else is, you know, well, don't forget now, the media has this. If you are a Fed journalist, if you cover the Fed, you've had this on the release. So they're quarantined.
Well, I'll tell you, this is interesting. Let's go do it.
All right, we'll see what happens, but I'll leave it open so we can jump on it. But I hope I laid out. I mean, that's the way I'm looking at it. And as always, I only make trades where I can risk as little as possible to make as most. You know, that's my whole. And if I don't make the trade, I don't care. That's okay. I have a small position on, which is well, I was out of 85%. I'm probably back to where. To about 30% of what I had all last week. So that's comfortable for me. Again, you have to find your size that's comfortable in this market, especially with the way these algos are going to drive this. And they are, because the algos are set up to be headline readers. And now the media has a half an hour. And the media is it's not the classic sense of what we know as the media, right? There are a lot of media, and they're crafting their headlines. And I maintain that a lot of them craft headlines to get the greatest volatility. Now, when I say that, because that sounds nefarious, it's not. It's just the way the market is reacting. And I really thought that the SEC and others should have looked into who these, because there's a whole lot of new media sources out there. Interesting that I've come to rely much more on Axios and Politico. And I know that they can have a liberal bias. I don't care, but they are good journalists and they cover things in depth and give you at least solid. And now I learned yesterday that Politico is being bought by the German publishing house. So somebody else, I'm sure Axios is going to get bought too. They're just doing such a good job because the rest of journalism really is not to me is very weak because they all want a narrative, and I don't want your narrative. Please just give me as what's his name would say, just the facts.
Sure. Yeah, just the fact. Give me the facts, man.
Or some semblance of the facts. I know that it's not factual, but at least give me something without a bias to it.
Yeah, the price action right now in the S&P is kind of interesting too. So we came out of the opening range. Like I said, the low of the day is made in the opening range. I see that as bullish. We came out of the opening range on that first attempt. So I'll always take those first two trades, and then pay for them, remove my risk, stop in just inside of the opening range, because that's it. Now, all of this bouncing around, I don't have to worry about. I've got offers in up at 86 to take profit. So whatever happens now happens.
Yep. Okay, I'm going mute, and